Good morning, America. Hubert Johnson here with Taxes Made Easy. Today, we're going to focus on the final part to the offer and compromise, the Form 656. This really is the heart of your offer. If you don't fill this out correctly, they will send it right back to you. And there's a lot of twists and turns with this. So again, we're going to go slowly through it. We're going to break it down and talk about what you need to be concerned about with the Form 656. Now, if not done correctly, like I said, they'll kick it right back to you. But that's going to be focus of today. And I want to welcome everybody that's watching live or on rebroadcast. And we'll be back in just a little bit after we take a short commercial break. And again, looking forward to answering these questions for you guys today. Again, Hubert Johnson with Guardian Tax Law. Be back in a flash. Welcome back, everybody. Hubert Johnson here again with Taxes Made Easy. So we're going to be diving into the 656. I plan to talk about that pretty much the whole time. Just one note about the difference between the 433A OIC form, which has all your financial information, and the 656. You can make mistakes on the 433A OIC, and you can change them. Oops, I made an error here. My situation has changed now. This is what's going on. They don't like it too much, but as you go through the process, you can absolutely, if you need a little bit more expenses, you can go out and get a life insurance policy or health insurance policy. You can do things to change those numbers. People make mistakes. And again, on your financial information, that's part of the negotiations back and forth. Normally, we don't tell people to do that at the last minute. We try to do that before we even submit the offer so that we know we have a good offer before we even get into it. But again, the 656, much harder to change. You can amend it, but if you don't submit it correctly, you're most likely just going to get it returned. So that's why it's much more important to be very detailed when it talks about the 656. So how to get to these forms again. So just go to irs.gov. And in the search tab, it's actually a pretty good search tab if you know what you're looking for. Type in 656 booklet. So that comes up again. You have the Spanish option, number one. Number two is the English option. So you go in there, and this is 32 pages long. Well, a good portion of these pages are just, half of them are the pages of the forms and general instructions anyway. So you can read through this. Take your time reading through this. It's not, even have some blank pages in here. But it's, are you eligible? Bankruptcy, can you pay in full? It talks about some of these things overall. A lot of these won't apply to you. A lot of this I've already touched on and explained. But it doesn't tell you everything you need to know. So we're going to go through this and talk about a lot of these different things as we go through this. And then you hit the Form 433A OIC. We've already talked about that. So we're going to scroll on past that. And then there's a 433B OIC for businesses. I would say 95 times out of 100, you're not going to use that form. Very rarely is that form actually used. So scroll all the way down to page 23 to where it says Form 656, Offer and Compromise. So an important thing to know, you have to have the most recent version. The IRS updated this form last year, and they wanted all the forms that had already been sent in to have the new form sent in. So just, yeah, if they update it again, I don't know why they've been form happy lately and updating everything. If they tell you just get the new form, that's fine. And right under the form number, it tells you when that form was created or updated. So this one was updated April of 2023. I'm hoping they don't decide to just update it again. It's like people just don't have things to do there. So very first question here is, did you use the pre-qualifier tool? You can click yes or no, but you have to click something. The IRS really doesn't care. It's not use of mandatory, but it's recommended. I always click no because I don't use it, because I know their system better and I know that their tool is flawed. Will give false positives. It rejects people when all you have to do is move things around. It's not a professional tool. And just like any tool, it's only as good as the information that goes into it. And to truly be able to make a good analysis, I think you do need a professional that knows the program inside and out. If you have a simple case, you might go there, but I've had people where the tool told them no, they didn't qualify, and I got it accepted. So, or my office. But you have to mark that yes or no. Individual information. This is pretty straightforward. First name, social security, joint offer, and social security number. So this is, we're going to dive into this later, but if it's two spouses, husband and wife, or spouse and spouse applying for an offer in compromise, and you both owe debts the same years, then you put yourself on here as joint filers. If you have separate liabilities and joint liabilities, you have to do separate 656s. So that's where it gets fun, and we'll get into that later. So your home address, your physical address, they always want a physical address, even if that's not your mailing address. And then your home mailing address. Is it new? So if it's not showing up, if you haven't been filing tax returns with this new address, they want you to click yes here. And do you want us to update our records? The answer is yes, unless you want your mail to go somewhere else, because responding to the mail from the IRS, especially the offer unit, is extremely important. If you have an EIN, this is where you put your EIN, if applicable, because they want you to put everything on one form here. So if you owe 1040 taxes, which is what most people are going to owe, you have to list out the years. There's no set way to list out the years, but it should be the full year, comma, next full year 2014, comma, 2015, comma, da-da-da. I have shortened that when there's too many years to 15, 16, 17. But for brevity, just to be clear, I try to put the full year for each year. And they have a nice long line for that. If you want to write it on the side or below, that's fine. But get all those years in there. If you do not have all tax debt listed on the 656, they're going to either ask you to amend it, or they're just going to return it to you with no appeal rights. Trust fund penalties, the next line right below that. First of all, if you never owned a business, you don't have to deal with this. If you did owe a business, these are penalties assessed directly to you, and you have to list these out as well. But you can do that on the same form with 1040 tax balances. If you have an EIN, you can do 941s, 940s. Caveat here, if the business is still open, probably not going to be successful. Now you can do a 6056 for a business, just for business debt, and I've done that, and especially for a closed business, pretty easy to do. And then other federal taxes. So there's plenty of other kinds of federal taxes, not things you'll hear of all the time. But if you have other numbers, just provide the tax type, so the form number and the year. If it's a civil penalty and it's not TFRP, just put civil penalty, this period, etc. Caveat here. Civil penalties for fraud usually are not. You can't do an offer and compromise on them. The IRS treats civil penalties for fraud very differently. And that's rare that you've gone to some kind of criminal trial or criminal proceeding, and either you've been convicted or you pled out and accepted a fine as part of that. So anything for fraud probably won't qualify for, most definitely won't qualify for an offer and compromise. Things change, so I always throw a qualifier in there. But when you have balances or fraud, a lot of the normal rules don't apply. And if you need more space, use attachment and title it attachment to Form 6056 and date it, and then sign and date the attachment. I almost never use an attachment on here, but if you do, again, that's easy procedure. So the low income certification, this can trip people up. So if you qualify for it, great. It saves you money and makes it easier to submit your offer and compromise. If you don't qualify for it, don't ask for it. If you're right up to the line, it's kind of iffy. So there's two ways to ask for this. First way is you qualify based on your AGI for your last tax return. So you just look at the number of people in the home, the amount allowed for 48 states, Alaska or Hawaii. It can be somewhat reasonable, but at the same time, it's one of those things. If you qualify, great. If you don't, you just don't. And there's, again, look at the last year, or you can look at your gross monthly income, your current. So you can have a high AGI for last year, but your current income multiplied by 12 is equal to or less than the amount shown on the form. So what happens if you submit your offer, you think you qualify, and then the IRS gets it and they think you don't, that you don't qualify for the low income certification? They'll run the numbers, they'll look at it, and they'll stop the offer, and they'll come back to you and say, hey, we don't think you qualify. You need to send us the fees right now, or we're not going to move forward. So you can either fight it and try to provide proof, hey, this is my current income, or this is my income from the previous year. It's hard to contest the income from the previous year because they have that information from your filed return. But as far as the current year, they will contest that. And the number one thing they're going to try to push around is your income, which is why it's so important when you're calculating income that you do it the way the IRS does it. So if you're doing a business, again, this can trip up a lot of offers if you don't have the right forms, if you claim the certification and you don't have the right fees in. So if they come back, they'll ask for 20% of the offer and the filing fee of $205. And if you don't get that in quick enough, anytime they have a chance for you to respond and you don't respond soon enough, they will return the offer. And they'll just say, look, you didn't respond within the time frame and your offer got returned. So the next section is about business information. I'm not going to really worry about this too much because those are the exception that you're filing for a business. And then we're going to go down to page 3. And we're running up against a break. So this is going to take some time to explain. And we're already 17 minutes in, but we're about to hit another break. I'm going to try to get through the rest of this, but it is important to take our time and do it right. So stick with us, and we'll be back in just under 4 minutes and continue answering your questions and walking through the Form 656. Woo. Okay. Here we are back again after that short break. So again, Hubert Johnson with Taxes Made Easy here on smartmoneyculture.tv. So returning right to where we were, section 3 of the Form 656. There are a few boxes. Well, there's 2 main choices here. Doubt as to collectability. 99% of the time, you want to check doubt as to collectability. So that's you're submitting the software based on you're claiming you don't have enough in assets and income to pay the full amount. So you're claiming that if they take this offer, they'll get more money than if they reject this offer. And that's the whole point of this, to show, look, I just don't have the money. So again, if you have special circumstances which would prevent you from paying the minimum offer amount calculated in the Form 433A, see explain below and attach anything. So this is effective tax administration. This is the harder offer. You're saying your financials show you can pay the full amount or pay more than what you're offering. But you have special circumstances. So creating economic hardship. You have exceptional circumstances. So you can apply under these 2 You can get these through, but 9 times, I would say 99 times out of 100, doubted as to collectability is what they normally see. That's what's normally submitted. And so it just flows a lot easier. Effective tax administration is more subjective. You have to argue the facts of your case and pretty much lay your case out and ask for clemency from the IRS. And last few years, the IRS has not been in a forgiving mood. Just hasn't. So, throughout my 15 years as a tax professional, I've done thousands of debt offers, successful offers as to doubt as to collectability. Effective tax administration, I might have done 2 or 3. And I do know there are other professionals that do effective tax administration offers more frequently, but again, the go-to is doubt as to collectability. So to make it easy for you yourself and to accurately predict if it's going to be successful or not, I would stick with doubt as to collectability. Now, this is where you get into the payment terms. So this is really like a contract. If they agree, this is what you're going to pay. So 2 main options here: lump sum cash. This is section 4, and periodic payment. So again, you check only one of the options. You must offer more than $0. It can be $1, it can be $20, whatever, but it has to be something. So the lump sum cash offer, you calculate what your offer should be based on IRS allowables and what you can disqualify as an asset. That's what should go on your Form 433A. We talked about it. I'm going to go jump back there real quick. So this is the form page 7, section 8, where you go through box F, box A, and you put the offer amount. Remember, you're not just grabbing what's on the form. You're grabbing what they will allow based on their rules and regulations. And it can often be a better offer, or it can be a worse offer depending on what your numbers are actually get. But to get an accurate analysis, that's what you have to do. You have to go through their analysis. Don't just follow the form blindly. It will steer you wrong quite frequently. And that's why knowing how to go through this is so important. Whatever is on your 433A OIC in that section 8 has to match what's on section 4 here. If they don't match, they're going to kick it right back to you and say, hey, this is wrong. Please correct it. You have 10 days to do so, something like that. And if you don't respond in the 10 days, your offer is done. It gets returned. So again, this whole idea of hurry up and wait, it is so important for an offer and compromise. You need to hurry up, be there, and just wait, ready to respond, ready to be on top of them. And you have to bug them. You have to call them regularly, or we see too many offers that get kicked out, even incorrectly, quite often incorrectly. And we have to, when first staying on top of them, we can say, hey, we just called a week ago. You said this, and now you're saying it's rejected. What's going on here? You didn't communicate. You didn't do your part. And when we hold their feet to the fire, that's when we keep offers on track. So on the lump sum cash offer, let's say you're offering $1,000. That's pretty easy. Now, if you have a fee waiver, there is no 20% initial payment, and the remaining balance is $1,000. So you put $1,000 in the offer amount, 0 and 20% initial payment, $1,000 in the remaining balance. And then this is the easy way. Some people like to list this out month 1, month 2, month 3, month 4, month 5, and then break it down into monthly payments. The problem is you're locking yourself into making monthly payments, whereas a lot of people, they have to go get the money, they have to finance it if they want to pay it in full. Is this strict where you have to follow it exactly? No. But I always like to put amount of payment. So if your offer amount is $1,000, 0 down because you qualify for the fee waiver, the low income certification, $1,000 is the remaining balance. I would put $1,000 payable within 5 months after acceptance. That gives you, the taxpayer, the most flexibility. So that gives you 5 months from the date of acceptance. So when they accept your offer. So as you're going through this process, you'll make sure that you have those funds available. You could have a good offer. I've had offers where, it was 100,000 or more, and the IRS came back and asked for 15,000. That's not a bad offer if you can afford it. I've had people say, "Look, I just don't have the money. I don't have the assets." So we went back at it and negotiated. And we, had one recently that we got down to around $6,000. Going back and renegotiating, providing more proof and finding out what's the holdup with the IRS. And they accepted it at $6,000. That's something they figured they could do. It was a stretch, but still it was, on a high debt. And so it made sense to them. So if you're doing $1,000 and you don't qualify for the fee waiver, again, you would put total offer amount $1,000, 20% would be $200, remaining balance $800, amount of payment $800 payable within 5 months after acceptance. You don't have to fill it out this section like this, but again, it gives you the most flexibility. This is what I recommend. So when you submit your offer, you send in the 20% if you need to, the $205 filing fee, and then you don't pay anything while the offer is being considered. Those fees that you submit, you're not getting those back. That will be applied to your debt, the 20% fee. And then once they get and consider your offer and accept it, that's when the 5 months start. So it says 5 months after acceptance. So that's when everything's done and you get an acceptance letter from the IRS. That's not when every offer has to be approved by a manager, or if it's a larger offer, it has to be approved by their legal department. And that's most offers over $100,000. Okay, the second option here is periodic payment. This is the one I don't like. And so you can pay in 6 months to 24 months. So let's say you're doing $1,000. And total months cannot exceed 24. So if you have any kind of future income, choosing this option will increase your offer. If you're positive $100, your offer would be a month. For 12 months, your offer under the lump sum would be $1,200. But here under periodic payment, it would be $2,400. So again, be mindful of that. If you're positive at all, you can still qualify for many offers. But here with the periodic payment, it can increase your offer. So you put in your first month, let's say you're going to do, let's say it's just to make it easy, the offer amount now is $1,200. First payment of $100 is included with the offer. Then the regular amount for the following payments will be paid on, just picking day of the month 1 through 28 because of February, for how many months? And the final payment to be paid on this date, this month. So you have to kind of calculate that out. And here's the interesting part. You must continue to make these monthly payments while the IRS considers your offer, unless you have a low income and certification. If you don't make these regular payments, doesn't matter how good your offer is, if you miss a payment, they can reject your whole offer. No appeal rights. So if they reject your offer based on you missing a payment, or you don't keep up with these monthly payments, something happens, your whole offer is out the window. Everything you paid in is money lost. So if you do the low income certification, then you have to start the payments 30 calendar days after acceptance of the offer, unless you agree to some other date, But again, I've seen too many offers fail under periodic payments, and usually offers that another company has filed, and they haven't explained this well. That look, a lot of these fail because life happens. Someone has a hiccup in their finances. They're usually stretched if they're qualifying for an offer anyway. Something happens. There's very little flexibility here. If you can't make the payments, your whole offer goes down the toilet, and everything you paid in goes to your back taxes. However, with the lump sum, you do the 20% when you file your offer. So you have to get that together, but you submit the offer when you have it. And then in your case, should already be protected with either an installment agreement or a non-collectible status. So that's what we prefer to do. But with the lump sum, you submit it, and then you have 5 months after the acceptance. You have that whole time to figure it out and have that money to pay, ready to pay. So you can borrow it, you can get a loan, you can do all kinds of things to get the money to pay down and pay off your offer and compromise. But you should sit down and review it. And every time I do an offer analysis, I sit down and review it and say, well, here's your offer. I had one yesterday. Went over it. It looks like $130,000 offer. That's really high. Why would someone pay $130,000 to the IRS? Well, in this case, they owe a couple $1 million. So $130,000 is a great deal for them. And they just have assets. That, again, it's assets and real property that we can't just give away or explain. But again, that is an issue there. But again, sometimes that is the case. And he wants to do it. The client wants to do that because he believes he can come up with the money and probably take it out of the equity in their home. So again, be very careful which option you choose here between lump sum cash and periodic payment. I highly recommend going with lump sum cash. Like I said, I've had plenty of offers. People have come to me, they've had offers fail, do the periodic payment, and then come back. Not so many as far as the lump sum. Usually people know what they're looking at from the beginning. Okay, Section 5. This is optional. If you want your payment to be applied to a specific tax year and a specific tax debt, such as employment taxes or TFRP, tell us the quarter. I mean, you can be a little, that's if you have TRP penalties or tax years. You always want to apply it to the most recent year. The IRS wants your money applied to the oldest year, the year that's going to expire the soonest. You can put this on here, but again, so you can't, you can't designate them as estimated tax payments. If you do it, and this is new, the EFTPS, so the Electronic Federal Tax Payment Service, if you make those payments, you can list these out. So you get the fee, 205, the date, and the EFT number, offer payment date, and EFT number. So why do we want to make payments? No, any offer, application fee, or initial payment made via EFTPS must be made the same date as your offer is mailed. So there's always a twist. Why do we want proof of payment? So normally, I always tell people, and we mentioned this with these fees, I always want people to send in personal checks. The IRS is getting better, however, at doing EFTPS. So typically, this is what we do, is we ask for personal checks, because if you send a money order and a cashier's check, the IRS is good at losing stuff. And if they lose it, they say, hey, this payment wasn't made. I said, hey, it's sent with this. You guys lose stuff right and left, but we'll submit another payment. So if they lose your check, no big deal. You cancel the check. You can either reissue another one or do a different kind of payment. An electronic payment is what I would recommend. But if they receive and cancel your check, or they process your check, you get proof from your bank. You get the canceled check, which is proof certain that they received and processed it. There's no such paper trail with a money order or cashier's check. So unless you're walking in a money order and cashier's check and delivering it to them in person and getting a receipt right then and there, I don't recommend those forms of payment. I had someone walk in a payment to the state of Arizona recently, and they wanted a cashier's check. So he went and got a cashier's check, walked into it, gave it to him. but I got a receipt right then and there for that payment. Again, you have to verify everything you do with the IRS. We don't trust them as far as we can throw them. So again, this whole payment thing is very important, which is why I'm spending a little bit more time on this. If they misplace your check, if for something happens and they need additional funds or they want you to make an immediate payment, that's when I recommend people go to EFTPS. You can pay, you can do a bank draft where you don't have any fees, or you can pay by debit card, credit card, and there are some fees attached, but you get an immediate EFT number, you get an immediate confirmation. That is your proof certain, as good as a canceled check, that you made the payment. And the IRS cannot question that. So you want proof certain that your payments have been received and processed. So this caveat here, that the payments must be made the same date your offer is mailed. Again, they try to make it easy and then they make it hard. Coordinating that is the difficult part. So again, that's something that we haven't had success with moving forward, because they have to mail in. It has to be wet signatures on these forms. 433 AOIC and the 656 have to have wet signatures. So make sure you have that. You have to send in original documents, and if we're reviewing everything, making sure everything's correct before we submit it, which is what we always do, we can coordinate to make sure those are paid on the same day. But again, it's much easier to just send personal checks and move forward that way. Okay, source of funds. And again, we're coming up on another break soon. So source of funds, you just have to put where the funds are coming from. If you're borrowing it from a family member, they'll probably ask, can you borrow more and pay off your whole debt? And you just have to tell them, no, they're not willing to give me that much. And if it's from your wages, if you're working, you just put from my wages, etc. And you just have to put something in this section 6. So we're gonna walk through the last of it when we come back, and I think we'll finish the whole form today. But again, Hubert Johnson with Taxes Made Easy, here from Guardian Tax Law. So we'll be back in about just under 4 minutes. And if you have questions, write them down. If you have concerns, call us. Again, free consultations. You can talk directly to a tax attorney. We'll be right back. Hubert Johnson, Guardian Tax Law, walking through the Form 656, the contract part of the offer and compromise. So again, we're in Section 6, talking about source of funds. You just have to put something there, source of funds. Don't put down, from my lotto winnings, or if you have an asset that you haven't disclosed on there, but you have to put something down. From my wages, borrow the funds from friends or family, something. Or if you're on unemployment, put unemployment. Just a quick caveat, I mentioned this before. If you're unemployed, you have to be a long-term unemployed to do an offer and compromise, which means 1 year. You have to be unemployed for 1 year before submitting an offer. So again, it talks about making your payment. You can pay through EFTPS. If you have joint or related offers, so you have husband and wife, but there's separate debt, you have to do 2 different 656s. You can do one 433 AOC because that's your snapshot of your current financial situation. But if your husband owed prior to the marriage and then they owed jointly during the marriage, you have to do 2 separate 656 forms, one for the husband, one for the wife, and you have to pay a separate offer fee for both unless they qualify for fee waivers or for the low income certification. So again, it kind of lays it out. Checks have to be made payable. This is very key, to the U.S. Treasury, not the IRS, and they have to be sent, with the form, unless you're making an EFTPS payment, which has to be made the same day your offer is mailed. So again, if you do not have that correctly, they will just return your offer and just they won't even consider it. If your check is returned for insufficient funds, as well, they'll just return the offer, won't give you a chance to fix it. Filing requirements. This is really important. So the first thing I harped on when I started this show, and what I've harped on, it sounds like I talk about it a lot, is because it's so important. You have to check these boxes. They didn't used to do this, but because it's become such a big problem, and I think it's a good thing, makes people understand that you have to be filing compliant or they just return your offer. They've always done that, but now they're having people certify that and actually check on it. So I've filed all required tax returns and included a copy of any tax return filed within 12 weeks of this offer submission. Ignore that last part. They do not like copies at the offer and compromise unit. They say it doesn't, no. So first of all, you want to file any return and make sure it's processed before you submit your offer. And if it's not processed, the offer and compromise unit cannot consider it. Doesn't matter. They do not talk to the tax processing department. It's like, two heads of a hydra staring in opposite directions. Tweedledee, tweedledum, back to back. They're not going to communicate with each other. So that's why I do not submit offers until all tax returns are received and processed by the IRS. Now, if it's in the middle of tax filing season, you file your 23, but you're not going to owe, it's not going to cause a problem, you're fine. But if you anything else, if you're going to owe, you have to make sure, and you're going to include it in your offer, you have to make sure it's fully processed. Can you include the current year into your, the year that just finished into your offer and compromise? Yes, but you have to show, and that's the next part of this for payment compliance. You have to show you're not going to owe. If you weren't required to file for tax returns, just list the years you weren't required. And again, they're looking at the last 6-year period. So it says do not include original returns. They will not get processed. They don't talk to each other. You must either file electronically or mail it to the appropriate IRS processing office. And even then, I would not submit an offer if you just filed a tax return. I would wait for its to be processed and then submit your offer. And I follow up with the IRS and make sure it's processed before I submit an offer too. So again, verifying everything, making sure you have all the ducks in your rows, all the I's dotted, T's crossed when you submit your offer is very important to make sure you have a successful offer and compromise. Tax payment requirements. So again, this is the second half of compliance. First of all, you have to file your taxes if you're required to. So you have to do that timely. The second duty as a citizen that you have is to pay and making sure you're not going to owe moving forward. So check all that apply. I have made all required estimated tax payments for the current tax year. So right now, we just started 2024. They're talking about this current year. And this is the perfect time, the beginning of the year, to show, hey, I'm on top of it now. I'm not going to owe moving forward. Second box is I'm not required to make any estimated tax payments, either because you don't have any income, you're not self-employed anymore, or you're working W-2, a W-2 position. So a lot of people will change things up. If they're self-employed, they'll get on payroll and start getting a paycheck where their taxes are withheld from that. Or they'll go from 1099 to W-2. So tax deposits, these are for payroll taxes. You've either made all the required tax deposits or you're not required to anymore. So for the current quarter and 2 preceding quarters, they don't want any other issues popping up. So really, most people, it's either if you're self-employed, you want to click this first box. And if you don't have any estimated tax payments, click the second one. And most people just click the last box unless you have federal tax deposits that are required for payroll taxes. So moving on, you have to fill that out. You have to do it correctly. And so again, it goes through if you don't. So I could explain all this. Again, I've talked about all this. One of the conditions here, you can't owe again for the next 5 years. If you owe again in the next 5 years, you will default the whole year. So right here is a 5-year period. That is absolutely key to maintaining an offer. If you owe in year 4 again and you don't pay it and it goes to collections, it will unravel or default the whole thing and put you back to square one. And so again, this tells you, everything will go back to the way it was. Any tax liens will be put back, and you'll be facing collections. So while your offer is considered, a hold is put on your case so the IRS can't take any new collection activity. At the same time, because they can't collect, it extends out when these tax debts expire. So if you have tax debt that's expiring soon in the next year or two, I almost always tell people, look, don't do the offer. Do a non-collectible status. Let the time ride out. That's much more sure thing, easier to do. So understand that when you do an offer, if you do multiple offers, you're extending out how long the IRS has to collect from you. Bankruptcies, appeals, anytime where their collections, their ability to collect is put on hold, extends out how long they have to collect from you. Tax liens, if your offer is not successfully, if it's not successful, the IRS almost always now files a tax lien. They're doing this on pretty much everyone. So again, they will do a thorough research. They will go and check your state in vehicle registry. So if you have the DMV, DOT, whatever, anything registered in the state, they'll find. They'll go through this. And so, again, some of these other things, we don't need to hash out. I want to get through the last of this before we run out of time. And it's just the signatures. This is important. First of all, taxpayer or corporation name, if you're filing for a corporation, you have to sign and date. Here you sign and date for the spouse. So if you have a preparer, so you have to sign this as the primary submitting this. Your tax professional should not sign the 656 for you. The question is, who do you want them to contact? If you have a tax professional, they should fill out section 9 and check this box. By checking this box, you're authorizing the IRS to contact you. If you do not check this box for your representative, they will not contact the representative. They will contact you. And I expect you to jump and you to be ready. And if you're not, there goes your offer. Any tax professional that is not on top of it after you submit an offer, that's on them and they can be held responsible. So right here, again, you want to check if you're not represented, check who you want to get the contacts, whoever's going to be on top of it and responding quickly. If someone never answers their voicemails or their phone, do not have them be the person checking it, or you need to change your habits and be ready to, hurry up and wait. Anytime they call, you have to respond. You have to hurry up. You have to make sure that the ball is in the hands of the IRS. Okay, and that pretty much wraps it up. Do not sign on this last part. This is for IRS use only. And then this is important down here. So again, this is kind of a checklist. The checklist, I've talked about pretty much all of these. You complete all the forms. Is the offer amount on the 433A OIC, does it match what's on the 656? And if you are filing for special circumstances, you have to provide supporting documents to prove it up. Have you filed all tax returns? And copy. You have to do a payment option. So again, you have to do a separate 656 for any offer that includes business and individual tax debts. That's separate. So if anybody has a separate and joint liability, which is common, you have to do a separate 656. You write on it related to such and such offer when you submit it, and then that can get received and processed together. Like most offer examiners, if it's 1433A, they want to look at it together. Any supporting documentation. Did you include a form 2848 with your offer? So a power of attorney form. And the power of attorney has to cover all the years on this. Letter testamentary. Most people that are purchased, you're not going to really do offers for estates. Because once they pass, then there's no more financials because there's no income, there's no expenses, and they just go after the estate. And if they pass away, once the estate is used up, the tax debt just becomes unenforceable, and they usually just close it out. So again, separate check or money orders to the U.S. Treasury for the application fee, unless you have the fee waiver. Where to mail it. This is really important. So wherever you mail it is where you're going to follow up with your offer and compromise. I'm going to upset some people here if the IRS is watching, but again, I don't care too much. Brookhaven is the ideal place. They're usually on top of it more, and it's easier to get through to them in general. But if you're in any of these states, Arizona, California, Texas, some of the biggest states, the highest population send their forms to Memphis. But here's the phone number right here on the 656. So I'm on the bottom of page 29. So that tells you where to submit your form, the address, and the phone number for that unit. Once you submit your form, again, about 6 weeks after you submit it, you want to follow up and make sure that it's been received, that the term is processable, which means it's okay. They're not finding any immediate problems with it, and they're going to assign it to a revenue or a appeal specialist, or offer specialist. They've been changing their names lately. They're going to assign it to an offer specialist to actually consider and go through your offer and compromise. So you have to make sure it goes to the right place. And then here's the number to follow up with. For Memphis, again, it's 844-398-5025. For Brooklyn, it's 844-805-4980. So you need to call them. You need to call them, bug them. And once you get an offer specialist assigned to your case, if they're not responding, if they're not on top of it, who do you go to? You call the main line. And who's going to answer? Other offer specialists. So oftentimes they know the person, they can send a message to them. That's how you get a hold of their manager. If an offer specialist isn't doing the right thing, or you don't agree with their decisions, you can always ask them for their manager's name and number and reach out to their manager. If they do not respond, go to the unit, call the unit and follow up with them. And that's true if you submit an appeal, if they're not responding, if they rejected your offer and didn't tell you why, or you don't have a clue what's going on, you have to follow up. And the offer units, either Memphis or Brookhaven in New York, are the way to do that. Now, if I can't get through to Memphis, and that's usually what happens. Again, the best time to call, this is different, the IRS. It's a completely different calling system. So they're not open to 7 p.m. Best time to call is usually later in the workday, and they're on Eastern Standard Time. At Brookhaven, Memphis, it's, I believe, Central Standard Time. So Tennessee is weird. Yep, Central Standard Time for Memphis, and Brookhaven is Eastern Standard Time. So again, you got calling first thing in the morning, later on in the week, Wednesday, Thursday, Friday, or you can try later on in the day. Again, if you have questions, reach out to us. We have our website below, guardiantaxlaw.com, or 520-485-7371. And I hope you have a great day and great luck in submitting offers and wiping out this IRS debt. Thank you and have a great day.